My mission is simple, to make you money. I'm here to level the playing field for all investors. There's always a bull market somewhere, and I promise to help you find it. Mad Money starts now. Hey, I'm Cramer. Welcome to Mad Money. Welcome to Cramerica. I'll be one of my friends. I'm just trying to help you save some money. My job, not just to entertain you, but to educate, teach, and deal with days like today, because I know how tough they are. So call me at 1-800-743-CBC. Of course, you can tweet me at Jim Cramer, but you got to be a little nicer, all right? Please. All right, whenever I tell people I like the market, you know what they say? The market is too high. It's too expensive. Do you know how many times I've heard that phrase this year? People have been brainwashed into believing the market's too high, when in reality, well, there are parts of the market that have gotten incredibly cheap. I think some of them are in a proverbial bear market. They're just obscured by the high flyers. Now, if you look under the hood, though, the bargains are plain as day, even as the averages might be too high, and I'll give you that. See, I bring this up on the day when finally the other shoe dropped, the one that gave us our first case of Omicron here, which I said would send the averages into a tailspin, and it did. Dow sinking 462 points. It was up very big at one point. S&P tumbling 1.18%. NASDAQ nosediving 1.83%. It was really painful.
The house of pain.
Why? Because while many stocks are down, not all stocks are out, because the companies aren't out. It's a very hard point. We're going to get it across today. All week I've warned you that we're going to get another leg down when we start hearing about Omicron cases in the U.S. And we only have one so far. It's going to get much worse. So now you can start the nibbling process. Just nibble, because it's inconceivable that this will be the only case. In fact, I do expect thousands of cases, as we have so many unvaccinated people, or so many people who need that third boost because they got vaccinated long enough ago that the power is wearing off, which is what was happening to me. All right, so let's face it. The Omicron strain is here to stay. We just don't know when the market will start pricing in these looming infections. It did happen before. It's going to happen again. Happened in Delta, happened in 2020. It's a total wild card when it's priced in. But in 2020, it happened. First strain came, and then we decided it was okay after a longer period. Delta, first strain came, saw how bad it was. It got to sell off. And then we started thinking, maybe we should be buying. That's what I'm prepping you for. We are in the quick second sell-off. The second shoe doesn't finish dropping, though, in a single session. Now, there are plenty of names that are down big from their highs. But given that it's the first day of December, why don't we just go to the November videotape and examine some of the largest capitalization stocks that just got completely annihilated and people are giving up on? These often represent the biggest bargains, or at least decent, better entry points than just a few weeks ago. All these are quality companies. It's not a single obscure company. Let's start off with some of the obvious names. And I'm going to give you, these are stocks that we have been buying for the charitable trust because they've been pulverized from their highs, and they're now the definition of cheap, not on this year's earnings, but now on next year's earnings. I'm going to give you four of them: Disney, PayPal, MasterCard, and Wynn Resorts. Look at the charts. They're nowhere near the highs. You need to understand our philosophy for the charitable trust. You can learn more by joining the CNBC Investing Club. See, we have a bunch of rules. For example, we don't like to chase. So we prefer to buy stocks on the way down, not the way up. We don't buy stocks for the now. We're not trading. We're investing for the long term. They're very different. And we don't mind losing money on our first purchase. Actually, I love it when a stock goes lower that I like, allowing me to put on a larger position. I hate it when we start buying something and then the stock ramps before we get enough shares to make a difference. When it comes to Disney, PayPal, MasterCard, and Wynn, we've got a good news, bad news situation going. The good news is that these stocks have all fallen from where they were trading when the trust started buying them, giving us a better entry point. Of course, that's also the bad news because our entry point was obviously now too high. Yours won't be. Let's start with Disney, which is down more than $60 from its 203 peak. When I hear people say the market's too expensive, I like to explain that something like Disney's down too much versus what it got going for it. The theme parks, ESPN, yes, I saw the numbers. I saw the millions drop, but it's got ESPN Plus. People are paying for the movies, the cruise ships. Now, it doesn't mean, again, that Disney is going to stop going down tomorrow. No. It does mean you got to start somewhere. It does mean if you look back 3 months ago, you can see how far it's gone. You might 3 months from now say, why didn't I pull the trigger on something? Right now, Disney's being held down by the Omicron variant and disappointing subscriber numbers for Disney Plus. That's their streaming service. This stock won't stay horrible forever. Why? Iconic company, best franchises. That's what you want. Broken stock, not broken company. You really want to tell me that they can't fix Disney Plus by offering something new? That's absurd. They may not even need something new. The Mandalorian comes back next year. Beatles doc, I got to check it out. Okay, time to start a Disney position. Not perfect, but we don't know. We don't know when Omicron is going to be built into the stock market. Second, how about PayPal? It's down another 3% today. Let's see if it goes down 3% every day. At what point does it go to -3? No, stock stop is 0. Did you sellers even listen to what CEO Dan Schulman said when he came on the show last night? Dan Schulman's the CEO. He made it clear that business near term is better than expected. Now, I know some sellers are motivated by PayPal's not-so-hot chart. I'm motivated by the fact that the stock's down 131 points from its 310 high. By the way, that's called a bear market. It's a bear stock. It would be one thing if the franchise were falling apart, but the next quarter is the last time PayPal will be weighed down by its overhang of its eBay-affiliated past. Again, it's a buy, but it could go lower. Got to start somewhere. You want some insanity? That could get even more insane. Why don't you take a look at Ma? That's MasterCard. Now, this one's down $95 from its 401 peak. Bear market. Only 2 weeks ago, CEO Michael Miebach told us the business was terrific. Nobody cared. He just boosted his buyback by another $8 billion, irrelevant, and raised the dividend by 11%. Meaningless. I think all those things are ridiculous, but that's how people say right now. Now, I thought people should pay up for all this good news, but investors are worried that MasterCard will get hit if Omicron causes a slowdown in international commerce. I know these payment stocks are hated here. I don't think MasterCard's quite ready to bottom at these levels, but it's a lot closer to bottom than it was a few months ago. That said, every time we hear about a new outbreak, it's going to get hit. All right, so at what point does an outbreak not matter? I don't know, which is why I have to start somewhere. Finally, there's one of the most hated stocks I've ever seen. It's called Wynn Resorts. Casino stock that's almost been cut in half. Probably goes lower. It has an $8.8 billion valuation. That's way too low given the value of the properties, which, if you wanted to build them now, would cost $13 billion. Thank you, management, for giving me that number. I think this company could easily be acquired by an MGM or Las Vegas Sands. They know the physical properties and the brand are best in show. Believe me, the insiders would be delighted to cash in. Now consider some other very obvious ideas. We were in San Francisco 2 weeks ago. Williams-Sonoma reported. I was blown away by how good it was. So what? Stock's now down 36 from its high. Bear market. It's become one of the cheapest retailers I know. Crazy? Can it get cheaper? Of course. But did you buy it anywhere near the high? No. The biggest fear of those wanting to come into the market is that they're buying at the high. Well, Then there's American Express. Now, this has fallen off a cliff in the last couple of weeks. They've got great ties to small, medium-sized businesses, not to mention millennial consumers. How about Citi? Down 18 from 80 to, it's going to be at 59, 58 soon. But it now trades at nearly a $17 discount to its tangible book value. That makes it a steal. Not that I want it, but it is. They can sit there and buy back stock all day and make money on it. But will they? I don't know. I haven't heard from them. I could name many more, but the point is there are tons of stocks in bear markets that are much further from being expensive than they were. They are in bear markets. Sure, they may have been expensive a month ago, but down here, if you take a year-long perspective, like my charitable trust, they may turn out to be tremendous bargains, and you don't know when they're going to bottom. Does that make the whole market cheap? Of course not. But I don't care about the whole market. I'm looking for bargains, for anomalies, most of all for damaged stocks of quality companies. Now, not one of these companies is going away. They might be challenged by competitors, but they're long-term winners that have always found a way to be on top. Sure, with Omicron, everything's gotten suddenly scary. It's enough to freeze you in your tracks. Honestly, you could do worse than freezing up. At least you're frozen. You can't sell everything. But the Investment Club teaches patience, and I'm urging patience with each of these iconic yet beaten-down stocks. You buy some now, and then you can buy some later. When the next leg occurs, when the next Omicron story comes out, and that's also bad. For days, I've told you we were waiting for the other shoe to drop, and it just hit today. But in this market, a shoe doesn't drop in a day. Bottom line, if you wait too long to buy these bargain basement stocks, and Omicron becomes nothing more than a runny nose for the vaccinated, even as the unvaccinated exercise their God-given right to hospitalization and death, I think you'll look back and kick yourself for missing some of these obvious buying opportunities. I don't want you to... You didn't catch the top. You might not catch the bottom, but they're certainly cheaper than they were. Adam in Texas. Adam.
Hi, Jim. I have a question on the stock C Limited.
Yeah.
What do you think about it? It's been selling off pretty hard since its earnings. Is it still?
Okay, so C. I'm so glad you asked about this, Adam, because here's the problem with C. Your fellow shareholders, they're running for cover. This is a great franchise because they really own their own market. It's incredible. It's Uber, it's everything. It's eBay, it's Amazon, it's everything. At the same time, everybody knew that, and they are jumping ship. If you want to start a position, you can do it. But remember, it's going lower because of your joker fellow shareholders who maybe bought the stock on margin. Can I go to Alex in Oregon? Alex.
Hey, Jim. Alex here in Portland. Thanks for taking my call.
Of course.
I just wanted to know your thoughts on Coca-Cola, given the inflation and interest rate situation we find ourselves in.
You buy Coca-Cola here. This is the kind of stock that you buy. You even bought it in 2001. You did well. But you got to buy it in stages. You'll see 3 1/4, and it had a fantastic quarter, by the way. So maybe you buy, let's say you want to buy 100 shares. But why don't you buy 25 tomorrow? Coca-Cola's not going away. As a matter of fact, Coca-Cola's gotten much better. James Quincy's doing a terrific job. We can't catch bottoms, people. Only liars catch bottoms. What we do is we start when it's a lot lower than it was. That's right. It is time to do some bargain hunting. So take a look at these stocks and just understand. I don't think a single one of these stocks is going to bottom tomorrow. But I also know that you're not buying at the top. Unity Software. They announced after the bell that it's closed on its acquisition of Weta Digital. So what does that mean? I mean, that's Peter Jackson. Think about Lord of the Rings, right? I'm talking to the CEO. Then the S&P 500 historically has a strong seasonal pattern for the month of December, but we have anything but that. Will history still repeat itself, or is it over? I'm going to check the charts. And Kruger Therapeutics has its sights set on curing some of the most difficult effects from Alzheimer's and schizophrenia, and we need them to win. Believe me. So let's talk to the CEO. And meanwhile, accept that these aren't the top, but they may not be at the bottom, and stay with Cramer.
Don't miss a second of Mad Money. Follow @Jim Cramer on Twitter. Have a question? Tweet Cramer. #MadTweets. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.